In this morning's U.S. Bank Economic 360, we're talking interest rates. Will they go down or up or stay the same as the new year gets underway? U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Watch producer Kelly Leon in the studio now with the latest on interest rates. Guys?
Thanks, Peg. Hi, Mike.
Good morning.
So interest rates, one of our other favorite topics next to gas prices. So talk a little bit about where we stand right now.
Sure. So, you know, it's no secret that we've got historically low interest rates and really have had them for several years now, going back to the financial crisis. And so at the time, this was the Federal Reserve's method for helping us to avoid the worst case scenario during the crisis, and then of course to help the economy recover from the recession that followed. So essentially they took short-term rates to zero, and then more recently have been using the so-called quantitative easing to help keep rates low. And so that's worked to some degree. Clearly the economy has recovered nicely. Certainly the stock market has got back on track. But you reach a point in time where you have to consider pushing rates higher again. And I think that's the juncture that we've reached today.
So yeah, the Fed is pushing to increase the rates, correct? And will they give in to that pressure?
Well, and so it's a tightrope really that they're walking right now. They run the risk if you push rates high too soon, that will derail the recovery. On the other hand, if you leave rates too low for too long, you can hurt the economy that way as well. So really it's about finding that optimal time to make the move. And truth be told, a year ago at this time, consensus was that 2014 would be the year that rates went higher. The economy was doing well. It looked as if it were a prime opportunity, but clearly the Fed felt differently. They didn't act last year, and in fact we closed 2014 with some interest rates actually lower than where they started the year. So they kind of kicked the can down the road, but as we sit here now 12 months later, the economy is doing even better. It's hard to see how they get through 2015 without making some kind of move.
Yeah, so it's a real balancing act is what they're...
Exactly.
So we trust you, Mike. What's the outlook? Give us your best outlook.
Well, so now the debate comes down to, okay, if the consensus is they will be raising rates, when does it actually happen? And so the Fed has always played it very close to the vest when they make their public announcements. They talk in cryptic language, and there are a lot of pundits who make a living trying to read the tea leaves of what the Fed is actually trying to tell us. So there are some saying that it could come as early as March, but I think the more conventional wisdom is that maybe late second quarter, early third quarter, so I think that's probably more likely. But one thing we do know is that whenever they get around to acting, it's not going to be a dramatic move upward. They're on record saying they're going to be very gradual, they're going to take it slow, which is good. That's, I think, wise. But, you know, so it's not so much of, you know, how much will they do, but when they actually get around to doing it. So we'll be focused this year on how strong are the economic numbers coming in and how quickly does that force the Fed's hand.
Okay, sounds great. We know that you will watch that for us, and we appreciate all that you and U.S. Bank do.
Thanks. We'll keep you posted.
All right. Thanks, Mike.